Hey, everybody. Thank you for joining us. I'm Dan Holstein. I'm a business coach and firm principal with Kaizen Performance Improvement. And I'm here today with Kyle Campbell, who's the president of Westridge Benefits, and Jim Friesen, who's the founder of Portage M&A Advisory. And today we're going to be talking about the importance of people in your business in terms of the business valuation and the potential for being able to have a successful exit for your business. And today we're going to Jim's going to kick things off with helping us understand what the landscape is like right now, as we're a year into COVID, in terms of what it's like and what you can expect if you're to go to sell your business today. So, Jim?
Thanks for the introduction, Dan, and glad to be alongside you guys. Like you said, Dan, today I want to talk about what the sale of business really looks like during the pandemic. Maybe a little bit different than you would anticipate, and I think there's some really good information I can share with you on this. So a little bit about Portage. We're in the Hamilton, Niagara, Toronto area, working across Ontario. Essentially, we're a boutique M&A firm. We work with business owners who typically would have revenue of a couple million all the way to 50 million. So typical transaction size is 1 to 30 million. And at the end of the day, what really drove us to this space is our passion for small business. Some of the services that we provide and some of the work that we would do with business owners would include formal business valuations, whether you're looking to restructure, figure out what the value of your company is, or going to market and figuring out what the market could bear. That would be one service that valuations would cover. The other piece that a lot of folks have found quite valuable is developing a roadmap. What is the value of your business today, and what can you do to really maximize the value? So that's another service. And then we also work with buyers and sellers, sellers who are looking at potentially selling their business, and folks who are looking at acquiring another business. And lastly, we do some ad hoc work as well for folks looking perhaps for some due diligence support, for folks looking at acquiring, perhaps they need a valuation or other negotiating support. So that's Portage. Those are the services that we offer. So what am I going to be talking about today? Really what I want to touch on is what's changed since the beginning of COVID. I'd like to think that we're nearing the tail end of it, but there are some elements that have really changed. Also, what are buyers looking for when they're looking to purchase a business? So if you're a seller, what are some of the things that you need to keep top of mind? Try to put on the buyer's shoes and try to understand what they're looking for, because that ultimately will determine how you structure the sale of your business. Lastly, what are some strategies to make your business more saleable? And I know Dan's going to be touching on a few pieces on the HR side and what you can do to really optimize retention. Kyle's going to be touching on other retention techniques using benefits. So I think it'll loop in nicely to what I'm going to be talking about as well. And then specifically around the lower mid-market, so small and medium-sized businesses, what are some things that you can do to set your business apart? So that's really the intention of this presentation. Let me jump into it. So what has really changed in the M&A space, the sale of businesses since COVID, and what are your exit options in this pandemic? I think a lot of people have planned on retiring and are probably wondering now, what does this really mean? Is now a good time to sell? Do I wait it out? How long do I need to wait it out? There's a lot of questions that have emerged. And lastly, with respect to the value of your business, what does it mean from a disruption perspective? What if your business, has taken a bit of a dip? Does that mean you're going to get less? Does it mean you're going to have to wait to find buyers? What does that really mean? And are there buyers out there? And what are they expecting during this economic climate? So let me start with retirement. And what are some of the typical things that business owners look forward to when they think about retirement and selling their business? Typically, it has to do with spending more time with their family, maybe less time with their family, depending on whether or not their family's in the business. Perhaps traveling and taking that vacation they put off for 15 years because they just don't have the time. Perhaps it's doing more golf or taking on a new hobby. Maybe it's just alleviating yourself from the day to day and relaxing and moving at your own pace, waking up with a cup of coffee, or perhaps it's a new adventure. You've got some good ideas as to what the next chapter holds, maybe a new venture. Perhaps that's what you're gonna take on. But what does retirement really mean to you? And what do you really look forward to when you think about the word retirement?
Jim, if I don't mind, I'll stop you there for a quick question. So
Sure.
on the employee benefits and the power, it's a compensation tool, and one of those factors is retirement planning. And a lot of the times it goes from a group RSP or group pension. When you sit down with the business owners, I find a lot of them don't put detail of what they truly need because maybe they're pulling from the company on a different absorbent amount, or they haven't put enough time around it. Is that common in the planning phase to kind of lack on the retirement side?
Yeah, that's a great point, Kyle. I mean, when you think about the value of your business, really the first question that you should ask is, what do I really need from my business to support my personal retirement lifestyle needs, right? So oftentimes what we'll ask people is, do you have a personal plan? Have you worked with the financial planner already to develop a needs-based analysis so you know what you really need to get for your business on sale? If folks haven't done that, it can be a little bit challenging in that they may not know what their number is. And I'll give you an example. If you've been using your business as a personal ATM, perhaps it doesn't really appear as though you need all that much to retire with because everything is going through a corporation. But once the corporation is no longer there, what are you paying in terms of cell phone bills, vehicle expenses, and that sort of thing? So back to your point, Kyle, it's pretty critical that you first get a personal financial plan in place. So you have a really good idea of what your day-to-day spends are, and also, what your lifestyle really costs. The last thing you would want to do is sell your business and find that it's not sufficient to support your existing lifestyle. So yeah, thanks for that question. In terms of exit options, what are some of the most common ways one can exit their business? The one that we typically deal with is selling to a third party. So bringing a strategic or financial buyer to the table. Sometimes what we'll see is the next generation steps up, buys the business, and I think that's always a good option, especially if there's been a good plan put in place and it's a little more seamless at the end of the day, less disruption to the business. Sometimes what we see is you partner, so there's a joint venture, or perhaps you partner with another third party. The seller remains on board, and perhaps the seller eventually phases themselves out, but it's more of a shared risk approach. Oftentimes a seller will say, you know what, I still want to be part of the business. I'm going to put a solid management place and team, and I'm going to sit at the board level. We've seen that as well. They hold it as an investment. They still get cash flow from it. So that's an option as well. And oftentimes what we typically see is folks do nothing. They don't have a plan and they maintain status quo. And typically until something really critical happens, they really won't move to sell. So I would highly recommend that you leverage one of the first four options as opposed to doing nothing. So what has really changed since the beginning of the pandemic? If you put on a buyer's hat, I mean, the way they would evaluate a business is, is there certainty? If there's been a drop in the financial performance, is this the new norm for the business, or will things go back to normal? So I think there's a lot of uncertainty in terms of how the business is going to perform over the next 5 years. And the other piece too is, can you get a loan from the bank in order to finance the purchase of a business? And although it doesn't really sound like a business owner's problem, it really truly is. At the end of the day, oftentimes value will be defined by how the deal is structured and access to capital. If the seller is cognizant of this, they'll truly understand the threshold of the value of their business. Lastly, something that we've really seen recently is that there are fewer business on the market. A lot of business owners have taken a dip. They've decided not to go to market. They're going to hold off. And so there were fewer vibrant, good opportunities out there. But interestingly, there's still the same number of buyers looking, and it's created a bit of a buzz for the top businesses. And what we've really seen is, it really does make the sale or selling your business quite appetizing at this point, which is counterintuitive. So, I mean, just to really stress the point, there is really a huge demand right now for quality businesses. And what I'll say too is the bank is still funding these transactions. They typically look at things on a case basis, but for the most part, we haven't had any issues with finding capital for buyers looking to purchase businesses. So just to dig a little bit deeper into what buyers are looking for, at the end of the day, when they're looking at a business and evaluating their options, they just want to make sure that if the business has taken a dip, they can continue to navigate this storm. Is there certainty that they'll get back on track, or perhaps the pandemic has propelled them to new levels? Is this sustainable? These are some of the things that we often hear from buyers. They're looking for an industry that has a positive outlook. If you think about certain businesses such as construction, a lot of these businesses haven't taken much of a hit. There's a great positive outlook. There's been a lot of work in the trades, and people are doing home improvements, and the outlook is very positive. And as a consequence, these are the businesses that are really in demand. So you can see that a lot of buyers are flocking to those businesses. And then lastly, they're looking at the quality of the seller and the ability to partner with them, to learn the business, to help, to get their assistance navigating the pandemic. That's a significant piece that oftentimes is overlooked. I think the idea of someone coming in, buying your business, and you being gone the next day is really not realistic. We've seen it a few times, but I would say the most common way of transitioning is a buyer meeting a seller, there being some commonality in terms of the vision for the future, and the seller remaining on board and really helping the buyer get their footing. So at the end of the day, if you're a buyer, you want to see solid fundamentals. You want to know that the company can survive this pandemic if there has been a dip. If they've accelerated, you want to know that this is sustainable without the existing owner. So I guess all of this can be summed up to say, it's actually not a bad time to sell your business. In fact, I would say there's less competition on the number of businesses in the market. So if your business has done really well, or has remained readily consistent over prior year during the pandemic, it really will put you at an advantage, and you really shouldn't be afraid of jumping in and selling your business at this point in time. What can you do as a seller to make your business successful? And this is a little bit of a recap to what I mentioned earlier, and what Kyle alluded to. Understand your retirement needs, understand what you really need out of your business. Be realistic about it. When you're getting close to the sale and going to the market of your business, put your foot on the gas, do what you can to increase sales, eliminate any noise when buyers come to the table. If you've taken your foot off the gas and sales have decreased, they're only going to raise more questions around why sales have dropped. Is it because of economics, or is it because of ownership? You put your foot on the gas, it'll get buyers really excited about future opportunities. One of the critical pieces of selling your business is really putting an all-star team together, which we call the deal team. Have a lawyer who has done M&A transactions, and they do this on a day-to-day basis. I would say it's absolutely critical. Have an accountant who really understands the tax planning needs, who can help you navigate preparing all the documents that are going to be required for due diligence. Make sure your business coach and your other advisors have taken a look and make sure that there are no red flags. Build that all-star team and build a bit of a plan of attack before simply just going to market. And then most importantly, plan in advance. If you wake up one day and say, what, I'm sick of dealing with customers, I'm going to sell my business and I'm going to market tomorrow, your options are very limited. plan a few years out. From a tax perspective, you're going to need at least a couple of years. If you look at the lifetime capital gains exemption, from putting management in place to giving yourself the most possible amount to get from your business, you're definitely going to need at least a 2-year runway.
So just a quick question on the deal team.
Sure.
That makes a lot of sense to have the right people, going to bat for you and advising you. But can you just speak to the importance of having someone like yourself as that intermediary between the business owner who's selling and the acquiring party?
Yeah, no, good question, Dan. Oftentimes people wonder, what value we play at the end of the day. And a big part of our role is being the intermediary. So it's ensuring that the deal teams on both sides, the buyer side and the seller side, are set up. One of the pieces that are often overlooked, and sellers will say, I'm going to go this alone. I've got an accountant or lawyer. Why do I need to pay an M&A advisor? One of the pieces that they don't realize is, in terms of project planning and moving a business along from the beginning of sale to the end of sale, it's really difficult for one party to do it independently. You really do need someone objective. You need someone in the middle who can say, okay, Mr. Buyer, if you're really wanting to buy this business, here's what the expectations are, and here's the process. A lot of people are familiar with the elements involved in M&A, such as the LOI, doing the due diligence and that sort of thing. But oftentimes there's no tangible timeline being established. And what we do as intermediaries is we sit in the middle and we ensure that we're holding people accountable. If they're not doing what they said they're going to do, we can push and prod. The other big piece is just ensuring that the relationships preserved between the buyer and seller. So when you talk about transition, the seller and buyer, really at the end of the day, they should come out of all of this and be working together. The buyer may need that support. The seller is oftentimes leaving some financing on the table in terms of a VTB. And what they really want is to work together. And having someone independent who can sit in the middle and ensure that the critical pieces are happening and the relationship is preserved is, I would say, pretty instrumental in this entire process. In summary, the market conditions have changed. Access to capital has changed to a certain extent, but it is a good time to sell if you own a quality business. Plan, be prepared, and put your foot on the gas. Remember, buyers are plentiful. There's lots of people looking. People haven't just stepped back and said, I'm going to wait for the pandemic to be over. People are urgently waiting to invest their funds and look for quality businesses. So if you've got a business with a positive outlook, has good, solid fundamentals, there is a lot of demand for your business.